Michael Lasser, UBS analyst, has a neutral rating on the stock and a price target of 87. Michael, maybe you could just start by giving us the headlines. What'd you learn from your conversation?
So good morning. The key takeaways from Best Buy's print were, number one, Best Buy seeing a similar theme to other retailers that have reported earnings over this last couple of weeks, which is discretionary spending is under pressure as consumers have had to spend more on non-discretionary goods, and purchase cycles for all those things that we bought as consumers during the last couple of years are normalizing. Best Buy, despite those trends that led to a 6% decline in its same-store sales, is doing an effective job managing its profitability in light of that. But still, it's still uncertain what the consumer electronics industry is going to look like over the next couple of quarters before it eventually rebounds. But Best Buy, the stock is probably going to remain range-bound given all these good guys and not so good guys right now.
So we saw the comp decline in the quarter, although it was better than most on the street expected. And you mentioned the trough. I think it was also discussed in the conference call as well. What are some of the key catalysts to, propel things to the upside from here? Is it new technology? Because you kind of look at the overall picture of the consumer and excess savings are looking to run off. I would think a lot of excess savings have gone into purchasing some of the Best Buy products in recent years.
So you are absolutely right. The state of the consumer is going to be the number one factor that influences the direction of this category. The second thing will be, as we get into replacement cycles, all of those things like TVs, mobile phones, computers will eventually need to be replaced. I'm talking to you right now on my iPad. It is an indispensable piece of technology for me. And so if it were to break, I would need to replace it. That eventually will happen for most consumers. And then third, innovation. There'll be things more like augmented reality, artificial intelligence built into technology that's going to help. But the clarity on when all of this is going to lead to an inflection in the industry just isn't there right now. In the meantime, Best Buy is trying to return cash back to shareholders, manage through its profitability, and maintain its market share. And the net result of these puts and takes means that the stock's probably just going to hang out in this area until we get a better sense of what's happening. The one other point that I would mention is Best Buy generates about a third of its profitability from its private label credit card. And what's going to probably happen over the next couple of quarters is the losses on many credit portfolios will start to rise. And that's going to impact the profitability of that book, which could mean that source of earnings for Best Buy is under some pressure.
Interesting. A third. Michael, given your view, though, I'm curious as to what your reaction is to the fact that the stock's up almost 6%, having one of the best days it's seen in a long time. What's the market seeing that you're not?
Well, the interpretation there, David, is that expectations were low heading into prints, and positioning has mattered a ton in terms of short-term reactions to stock prices over the course of this retail reporting season. Over the longer term, the market's going to weigh heavily the puts and takes of what we're seeing across the retail space. Best Buy's doing, as I mentioned, a good job of managing through. We just think there are better opportunities in retail stocks at this point, like Ulta Beauty. Target is another one that's poised for recovery, and we like those stocks better than we do Best Buy at this point.